Hi, everyone. This is Kemba and Andrea, women entrepreneurs. You're listening to Keen on You. And we've got a special guest today who's going to be able to share with you some amazing and unique, maybe unconventional ways that you'll be able to finance your real estate transactions and deals. But before that, just Kemba, maybe share with our audience some of the things that we offer in terms of services that they could utilize.
Yes, so here at Keen on You and the Keen Real Estate Group, we offer tenant placement, property management services, as well as lots of educational tools and courses, free and paid content, so that you can get started in real estate, owning your first or investing in your next real estate deal, just so that you could build wealth for you, yourself, and your family. And check us out at keengroup.ca. And so now let's introduce.
Yeah, go ahead. No, go ahead, Kemba.
So we have Enrique Levy here with us, and he is a mortgage broker with Dominion Lending.
Mm-hmm.
Good
evening. Yeah, thanks for having me on. As Kemba was saying, my name is Enrique Levy. I am a mortgage agent, actually, not broker. Mortgage agent with.
She's telling us where you're going to.
Yeah, I mean, it's funny because I was just having this conversation earlier with one of my best friends, because to the client, there's really no difference between a broker or an agent. I just don't know if it makes sense for me to go broker. I think a lot of people are choosing to do so just because. But I work with Dominion Lending Centers. My niche is typically with self-employed individuals and people that are looking to get into real estate investing, be it people that are already investing or they're looking to leverage the equity in their principal residence and they want to create some generational wealth for their family. I am capable of doing all different types of mortgages. I do them all the time. It's just where I put my marketing efforts per se. But yeah, I'm always happy to help and share the wealth of knowledge, and hopefully you guys will all take something from this.
Mm-hmm. Yeah, well, I think even just hearing that you help self-employed, that's us. Yes. And a lot of the people that we work with as well, and that we've partnered with over time, they're also self-employed or investors, entrepreneurs. We love that you can help us and help those individuals, our client base, and also work to help us build generational wealth, which, as I think when we spoke to you last, we talked about the fact that our next big event is, in February. Every single Thursday is we're going to be hosting building generational wealth through real estate, which we think is very important to helping our community, Caribbean, Afro-Canadian, immigrants, women, families. And so it's just so important that we have and align ourselves with someone like you, Enrique, who is an expert in mortgage financing, because you can help us get done what we need to build generational wealth, because without financing, we can't do that.
Yeah.
We don't come with that inheritance that some other groups or other groups often have along the way in their lives.
Yeah. It's funny too, because especially for housing, it seems like such a daunting task, and for a lot of people it seems almost impossible, and they get intimidated, but there's so many different products that are out there that aren't widely spoken about that can seriously help. I heard you mention immigrants that are coming into Canada, and I did a mortgage for somebody last year that they got their permanent status. They had only been working for 3 months, and basically we just used their credit history from their previous country.
Okay.
I'm talking we're looking at utility bills. We used their gym bill just to show some kind of financial capacity. They owned a property in their previous country, so we're looking at their mortgage statement. We had to actually get it translated because they were coming in from India, but we had to get it translated.
Yes.
but it ended up working out, and it worked out beautifully. They got their home, and they're off to the races, right? And I find a lot of people don't know that it's possible. They think that they have to be here for a year or 2 years, and it's not the case. And you can still put down 5-10%, right?
Wow.
Awesome.
Yeah.
Yeah, and that's important because many immigrants come here wanting to capitalize on the opportunities that exist, and why, if they get too settled for too long, sometimes they got caught up in what may not be possible rather than what is possible.
Yeah.
And so good for that person having their PR and doing it shortly thereafter, or their permanent residency.
Yeah.
And so speaking of,
so maybe I think part of the reason why people feel it's daunting is what is it that that holds them back, or you feel that might hold them back?
It's expensive.
Do they know what they need?
I think the biggest thing is that people aren't properly educated on credit, right? Because I get a lot of West Indians and a lot of Africans that are just like, honestly, man, I really wish when I came to this country that I took this seriously in the beginning, because I didn't know much about credit and how credit works. And I kind of just came in loosely, or I used my credit loosely, and I lent it out to my cousin, I lent it out to so-and-so, and it didn't work out that well. Generally speaking,
it out.
Yeah, like generally speaking, like when it comes to your credit, the answer should be a hard pass. Different scenarios call for different things, and sometimes there is the gray area scenarios where people might just feel comfortable with doing it anyways. But if you got to borrow my credit, generally speaking, the answer is going to be no. I'll help you in whatever other capacity I can help you, if I can help you at all. But generally speaking, my credit's just too important, right? But
yeah, I would say that as an adult, it's a pretty significant number that you have to guard with your life, right?
Well, it's the difference of you being able to put down 5 to 10% or putting down 20%, if you can even come up with that much money, right? Because like right now, the minimum credit score required to put down less than 20% is a 620 for the primary applicant, right? The secondary applicant can have a minimum of a 600, right? And of course, this is on Equifax, not TransUnion. I strongly encourage people stop using Credit Karma for whenever they're trying to check their credit score to get pre-qualified for a house and a car, because
so is Credit Karma focused on the TransUnion score rather than the Equifax
Credit Karma
score?
uses TransUnion, and for whatever reason, the score that's shown on Credit Karma doesn't even really align with the TransUnion score. You know what I mean? So like, it's not really accurate. I always encourage people to go direct to Equifax and get your credit scores from there, because even in the banks, I had a client just in November who was so under the impression that they were in the mid 600s, and they checked their credit from the bank, right? So this is Schedule A bank. Most people do their day-to-day banking with these banks, and they thought it was in the mid 600s, and then when I actually pulled the credit, it was in the 580s.
So maybe that's what we're happening to, Kemba, when we're checking scores. That's the variance. It's that they're getting it not directly from the source, but from a third party, right? Is that what you're saying, Henrique? It's a third party.
That's exactly
it. Because Henrique, we check credit for placing tenants, and I mean our requirements are. Sometimes it feels like some tenants feel like we're as strict as the bank, but we aren't. But we definitely check the credit, and we've seen in many instances lately where we'll see a Scotiabank rating or any of the banks, and it's high, it's respectable, it's passable, and then we pull it, and it's like, ooh, something went wrong.
Yeah, not even like a few points, but maybe 100 points.
Yeah, I've seen as high as 130 points difference.
Yeah, that's terrible.
Right. And, part of me wants to say bad on the credit companies for not getting that aligned. But I mean, there's also third-party companies as well that are involved with that, right? And I don't know how their system is of getting these credit scores, or, if something's lost in translation, and, how it can be fine-tuned, right? So this is really just me from the outside saying, hey, like, fix it, right? But
I do find too, Henrique, that even just between TransUnion and Equifax, that there is a bit difference. Like I can have a big point difference, not even just a few.
I can't remember if it's TransUnion that rates it out of 1,000. I think it's TransUnion that rates out of 1,000, and Equifax rates out of 900.
900?
So because of that, that's where the variance is, right?
Oh, okay.
One reason why I tell people Equifax over TransUnion too is because typically speaking, if you're trying to buy a house and even a car, they'll look at Equifax for personal purchases, right? Whereas if you're looking to get into purchasing through corporations, that's when they'll start looking at TransUnion. If you're looking to put less than 20% down, the default insurance is going to check both.
Okay.
And the reason why the default insurance is checking both is because it shows 10-year history of if you had any consumer proposals or bankruptcies, right? If you had a bankruptcy, it's a deal killer. If you had a consumer proposal, as long as you've been released for 2 years and you can show positive growth in your credit, you're still in business. Right? So, it's really tricky. Like, credit in general, that whole conversation, we can go on about that for days, about how complicated that is.
Well, you know what? We'll invite you to our Credit is Your Superpower event so that you can maybe participate in providing some, valuable information to individuals.
Yeah. Yeah, absolutely.
So outside of credit, which we know is a significant factor, I mean, what are the factors personal factors for individuals would be significant? And without a doubt, every institution is going to want to know these facts.
Stable income as well. I mean, so here's the thing, you need to be able to provide your 2-year average for work. So if you're trying to buy a house and you've changed your job in that 2 years, if it's in the same industry, it's not going to affect you, right? But if you've completely changed industries altogether, that's going to hurt you a little bit, right? Now, if you are putting less than 20% down, it's workable, right? Got to jump through a bit more hoops, but it's workable. But in some cases, they can turn down the deal altogether, just because last year you were a bus driver, today you're a doctor.
So last year I was a banker. This year I'm a real estate mogul.
Well, you're an entrepreneur.
Yeah,
right?
that is a little bit different. Not to mention, for entrepreneurs, it's trickier on the A side without having 20% down, right?
Yeah.
There are banks that'll do it. I can't actually speak of the names without their permission because we have certain.
Well, yeah, we understand too, because this is also recorded. We want to keep it clean.
Yeah, so I gotta be compliant, right? But
Yes.
I got a bank, they do self-employed mortgages with less than 20% down, right? But it's very strict. Like, that business had to have been running for 2 years solid, and your income has to have been showing solid for 2 years. Your credit score has got to be good. I think at that point, even a 620 might be pushing it. You might want to have more towards a 640. You got to be able to prove that it's a registered business. If it's incorporated, your articles of incorporation, as well as all of your financial statements have to be in order as well, right? Everything has to have a paper trail. And if you are missing any part of that paper trail, the deal could fall apart, right? And depending how long your finance clause was, I keep telling people, stop going firm. Stop letting these realtors tell you to go firm. You know what I mean? Just because, there's the building itself has to qualify for the lender as well, just the same way that you do, right? So if for whatever reason there's something in the building the lender doesn't like, the deal also blows up in your face.
I noticed something this week too, with the lenders, as much as even with the paper trail, even with giving them all the income verification, they want a lot of explanation. So bank records, we want to know why these high, say deposits or infrequent transactions in your account, like what's that? And so they want a lot of explanations to verify details in the banking.
I know it feels so invasive for the borrowers.
It is invasive.
Guys, I say this to everybody, apologies, but you also got to understand that fraud is the highest it's ever been. You know what I mean? And that's something that I have to remind my clients of, because, excuse me, I've had clients that have gotten outright upset with me. Oh, what is it about me? Is it me? And some of them, is this a racist thing? I'm just they don't even know what you look like yet. They haven't seen your ID yet. You know what I mean? All they're seeing is that you make $200,000 a year, but on this month, you got a $60,000 deposit. It's a lot of money, right? And that's cause to think anti-money laundering. And that's part of how the banks are processing everything is it goes through anti-money laundering and it goes through anti-terrorism, right? So they ask all these questions, and with fraud being as high as it is,
Yeah, I don't like, I was like, Kemba, I think we did that transaction at the end of the year too quick. Now I have to explain what that money means and and what it is. And but I understand, and I even seen increased fraud during COVID. So I think that it's real, and it's clear that, you know, it's protection all around.
I'm gonna
So
give you a little fun
so
fact.
income, and I love that you gave, you know, what we mean by income and that length of time and so on, because I think that we've talked about that, right, Kemba? How important it is to stay in the same industry, or to make sure that if you are changing industry, that, you know, you have some length of time or period of time in there.
Yeah.
Otherwise, you still have to go back to, you know, sort of giving bank records or other accounts of how you're going to be a stable or good qualified and, you know, client.
Enrique, you were going to give us a fun fact.
Yeah, no.
Oh, he has a fun fact?
Just on
What's
a fraud,
that?
you know, like there is a bank at 1 Yonge Street who has one whole floor dedicated just to Brampton mortgage fraud. And I know the other banks are doing it too. But if you look
Oh
at the
yeah,
rest,
I've met, I know parents that I've worked with in my children's sporting events that they have a whole team just to address fraud within the banking industry.
But
most lenders have them.
If you look at, you know, so that they get one whole floor. If you look at the rest of the Golden Horseshoe, they also get one floor. So one city got one floor, whereas the rest of the Golden Horseshoe got a whole separate floor, right? So like, it's just to kind of tell you like some of like, especially in certain areas, what you're up against depending on where you're buying, you know what I mean? So like it really is a tricky process getting through anti-money laundering and anti-terrorism.
Yes.
Yeah. But, you know, definitely like having that too, like really what the A banks want to see, and as well as the default insurance company, because you are qualifying for both, is stability, right? If you can make them feel like you are financially fit, they'll happily give you the loan.
Very good. And I mean, that's the easiest, likely the cheapest way from a financing perspective to go, because going through the banks, you get the lower rates, you get, you know, likely they'll pay for the financing like options and stuff. Whereas, so for those of us who may not be able to go that route because we don't have that polished, you know, record, what are some of the other options that, you know, you might have?
We're switching over to a B lender now, right? Now, a lot of people...
I'm not sure that our listeners would understand what a B lender is. So we might want, so we talked about A lenders, Schedule A banks, such as the top banks, the main banks out there, and a few others that fall alongside them. But maybe give some explanation to the Schedule A.
Some of the alternative A banks that don't have branches, so it's not like you can just walk into a CIBC and get into a mortgage. Like they're alternative A banks, and you have to go directly through a broker to get to them, right? But some of those same alternative A banks also have what is known as B lending, and that is alternative lending for people that have trickier situations, right? They're taking on more risk, and they're willing to take on more risk, and they don't necessarily have to go by the same rules that the Schedule A banks do. So they're able to extend your debt service ratios. So for example, with an A bank, your debt service ratios, your gross debt service ratio is allowed to go up to 39% of your income, and your total debt service ratio is allowed to go up to 44%, right? There are B lenders that are willing to go 48 and 50%. Some of them are willing to go 50 and 55%. Some can go up to 60%, right? So what that means for the borrower is that you now have a little bit more wiggle room for your income versus how much you could purchase or how much you can refinance. You have a lot more flexibility in terms of like how you show your income. So I'll give you an example. I've got I'm currently working on a file, and this client has been self-employed for now 6 months. He registered his business, it's incorporated, he's doing really well. He's actually in the spray foaming insulation, which if a lot of you guys are looking to find a business that you can get into, spray foam is killing it right now. It's killing it. Yeah, it's insane. This guy in that 6 months has already made almost $300,000.
Wow.
Right. So this lender in particular said, okay, you know what? you've been in business, you got 3 months of income. So let's take 3 months of that income, your most recent income. So you don't get to pick and choose what 3 months. It's your most recent 3 months. And we'll multiply that by the 4 quarters of the year. Each quarter is 3 months. And then we'll use that to get your total income to qualify you for a house. So in that first 3 months, I think he made 100 grand. So they grossed it up to $400,000. This guy's out and buying $1 million property in his first and under his first year of purchase, right? He also has 20% down to put towards it, right? And that is an absolute requirement with B lenders. You have to have 20% down or it will not happen.
Okay.
Okay.
Right? You're taking on more, they're taking on more risk. You have to have more skin in the game. That's how it works, right? There's also something to note is that now you have broker and lender fees, whereas with the A lenders, the banks pay the brokers, right?
Yeah.
Yeah. So
one of the questions I have about that, so then maybe that, that B lending side doesn't apply to first time buyers.
It can. There are first time buyers that have healthy savings, or they have parents that are willing to give them down payment money, right? And generally speaking, when you're getting gifted money, you want to have it in your account for at least 90 days. However, on the A and the B side, there are some lenders that will accept 30 days if we have a paper trail from start to finish, right?
Okay.
If that money was sitting in mom and dad's bank for, I don't know, months, years even, as long as we can see it come out of their account, we can see the transfer process, we have the gift letter, and there's a few different documents that they may ask for just to make sure that everything was kosher. There are some lenders that will accept 1 month.
Okay.
Right. But yeah, like it's just, like I said, there's always got to be a paper trail. But with the B lender, they have the 20% down. And also something to note is if you are moving into an area that has well in septic, the lender can ask you for 25% down.
Okay.
Right. But there are some first time buyers that have absolutely taken advantage of it. For some self-employed people, and I'll throw myself in there, it is actually cheaper for me to utilize a B lender while reporting less in income than it would be for me to report more income and pay the taxes on that just to get an A deal. Right? Because the difference that you save between the interest rate and the broker and the lender fee does not match what you would pay in taxes to show more income. Right? So there are plenty of first-time homeowners that have recognized that. Or I've at least given them that advice and they decided that, this works, I'm good with that. And they've also gone in and purchased under a B lender. Right.
Okay. It's a good point to visit that, sort of cost or savings.
Yeah. Yeah. So, and there's many different reasons. Like even for investors, those extended debt service ratios really help, right? I got a couple of B lenders that will qualify you at contract rate as opposed to the stress test rate at 5.25%. So instead of qualifying at 5.25%, you're qualifying at 2.59%, for example, right?
That's awesome. Yeah, that's huge.
I've had clients who they qualified. My most recent one qualified at 820 and ended up when we put in the contract rate numbers, she and her husband ended up qualifying for, I think it's like 1.7 based on how much down payment they had.
Oh,
right?
that's amazing.
Massive difference.
Massive
difference.
It's $1 million difference almost.
Almost, yeah. So it's just like it really made it easier for them to go up in purchase price. So for some that just like they had higher expectations, they have the savings, just on the A side, it just doesn't allow for it. Here you go. Right? So especially for investors, as I was saying, those extended debt service ratios really help how much you refinance. Say if you're doing the BRRRR strategy, buy, renovate.
Yes.
How's it go? Buy, renovate, refinance,
Rent.
repeat. Is
that
the full acronym?
And rent.
And rent. Yes, rent.
You're supposed to rent it somewhere along the way before refinancing and so forth. But yeah,
there's a lot of R's.
The 4 R's.
Yeah.
There's a lot.
Yeah. For those investors, like being able to extend their debt service ratios that much allows them to pull out more money so that they can buy bigger projects, You know what I mean? So it's like now you're
Yes.
able to, like you got a good chunk of money out of this property, say you got 500,000. Now you can go buy a fourplex, you know what I mean, instead of a duplex. Now you can go get into development, you know what I mean? So,
Mm.
like that's something that's become really attractive to a lot of people. And
And that's going to definitely push that generational wealth building piece a lot, right? Like you're going to
huge.
make that stuff happen,
Well,
slam dunk, no problem.
especially because in the last 2 years, the golden horseshoe has gone up by almost 60% in
Yes.
value.
2 years?
In 2 years, yeah. In 2020, it went up, I think it was by like 26.5%. And
Yeah.
last year it went up just under 30%. I think it was like 27.9% property values went up
Yeah,
by.
that's crazy.
That's almost 60% in two
Yes.
years. So, and like I'm looking at the statistics, and it's funny because I get a lot of news feeds, and a lot of the genius economists that said that 2022 it's going to crash, they're starting to recant their statements, and now they're looking at it as like, oh, we were wrong, it's going up.
Yeah, clearly, because
Yeah.
we're all seeing it.
Yeah.
I mean,
So
we live in a country that's, one of the best places in the world to live, and people still want to come, and there's not enough places to live. I think the equation will flip if people just don't want to live here anymore, or and I don't think that's going to happen.
it's starting to happen a little bit, but not necessarily in the form of people leaving Canada. I know right now Nova Scotia and New Brunswick is getting a large surge of Ontarians.
Yep.
Yes.
That are moving out there. I know Alberta as well. However, I'm iffy about their market long term.
Yeah.
But like it's just like people are starting to look in other places because like work from home, like a lot of companies are now starting to accept that they're getting more productivity out of their staff working from home. Right. And it's a blessing and a curse because we have no on switch. You know what I mean? Or
Yeah,
off.
I don't like it. I know. It's
Your
like,
computer is so
you keep
accessible.
going.
You get an email, it's like, oh, I need to address this. You get a phone call, I need to address this. I'm doing it. You know what I mean? Like last night I worked till 4 a.m.
Oh,
Yeah. And it's just accessible. You don't leave your office, you don't know when to turn it off, right?
I
So
agree.
yeah, so like I think a lot of companies are now starting to realize that without labor boards getting involved, they're getting more productivity out of their staff. So they're starting to treat remote work as permanent, freeing up their staff to live wherever there's internet.
yeah.
Like I do
Yes.
see a little bit of a shift where that's concerned. I don't think it's going to be enough to tip the scales. Because ultimately, we got it really good here in Canada.
We do. But
So
from a lifestyle and just lots of things encourage people to live here. And I get it. I think there will be a settling of, when the life comes back to normal, and then there'll be things to draw people into the cities, and
yeah,
maybe you don't have to commute every day, but you want the parks, you want the other amenities that belong to a city that's, a beautiful city, the events, the people, you want the people. So, I mean, I like the country too, but in general, I think it'll balance out after a while.
yeah. I've very much so grown accustomed to small town living. I live in Orangeville.
Oh.
So it's not necessarily small town where small towns are concerned, but it's definitely a lot smaller than me most recently living downtown Toronto.
Yeah.
I'm definitely appreciating it, but I think a lot of people are also just appreciating space. The pandemic really made people that lived in condos uncomfortable.
Yeah.
So now they're starting to move further and further now, and remote work's allowing them to do so.
Yeah, for sure. So Enrique, like when you think of so people move from, say, trying to get in financing in an A lender, then if that is not a good fit for their situation and their credit or their employment and so on, they go to a B lender. What's the next level if A doesn't work for me, B doesn't work for me? Is there a C?
Private.
Okay. Cool.
Yeah, I mean, like technically speaking, one of my banks, the bank that goes up to 60% loan to value. Now, granted, you have to have a bit more equity in the property, right? But if they're going up 60% loan to value, I would say technically that's a C lender because not very many B lenders will do that, right?
Okay.
It's high risk. It's 60% of your monthly income that's going towards mortgage.
Yeah.
That's how that works, so mixed in with your debts, right? But in most cases people refinance their debts into the mortgage, so once again it kind of goes to 60% of your income per month. So you only got really I think two lenders that'll do that.
I feel like the lender that I'm working with currently is offering 68. Like, but I could be wrong.
I I need to get my homework in because I haven't seen anybody do 68.
Oh, I was just gonna look it up because I was like, man, he's saying 60 is the top, and I'm thinking I saw more.
You meant to press 0 and he pressed 8.
Possible? Please send that to me because I would love to. I've got somebody.
Yeah, I'm gonna look it over. I think I might have even sent you the commitment from the lender to take a look, but
Oh, it's that same lender.
it's the same
I
lender.
believe they only go as high as 60.
Okay.
But
So private then, is that something you can help people do, or is it that private?
yeah.
Go to my cousin, I go to my friend. It's something you can help them with.
So okay, so I'm extremely picky with the private lenders that I'll work with because private lenders can be sharky.
Okay.
You know, like they can be outright criminal. Sometimes you have you know, guys that manage a mortgage investment corporation who will take full advantage of being able to charge you 30%, 40%. You know, in Canada,
Really?
Yeah, man. Or the contracts are so rigged. Like I
Skewed
heard
in their favor?
Yeah, like I heard a story of this is actually through one of the brokers in my brokerage who years ago they had a client who signed on a contract that had a big blank space, big enough for a paragraph. And the lender went in after and typed in if you miss a single payment or if you miss anything, and that house comes to so well, they got out of it, right? Legally,
that's legally not possible. Like, so if anyone does that, that is fraud.
But here's the thing, right? Even if you can get out of it, do you really want that headache?
I absolutely not. Like, because then it looks like you've done something wrong. You actually have to prove that wasn't there before. You know, you don't want to deal with anybody who will do that to you. So you need people who are credible and so on. So that's a good point. If you're dealing with private lenders, you want to you're protecting yourself as well.
And I encourage people, if you are in the position where you have to go to a private lender, go to a company. It doesn't have to be with me, but go to a brokerage under DLC, Dominion Lending Centers. Go to, you know, like Mortgage Architects or like one of the big guys, because our reputation is a lot more important to us than working with these bums. You know what I mean? So like the likelihood of you falling into that trap is a lot less than going to someone that you don't recognize. You know what I mean? If you don't recognize them, to the rest of us, they don't have a track record.
Right.
You know what I mean? At least with Dominion Lending Centers, we're the biggest in Canada. That's a big reputation to mess up.
Absolutely. And potentially taking your contracts to a lawyer, having someone, even if you have to pay for that lawyer to review it and it's cost you to do that, you're in a better position than not knowing what you're getting into.
Well, you're more than likely going to have to get a lawyer anyways, right? To close the deal, because most private lenders want you to like want it to go through a lawyer. Sometimes they won't. I would say advice. Yeah, I would say run. But you know, a lot of people's like, oh, but lawyers cost money. That lawyer might have cost you $900, $1,500, but they also potentially saved you from a whole mess that you don't want to be involved in.
Yeah.
You know what I mean? So
and to understand what a lender is, they're saying, whether you're A, B, or C, or private, whatever that class, and I know there's no real C class, like it's just you were saying they're the next level, but any lending that's happening, that lender is saying, hey, I'm giving you 100, 200, $1 million, $2 million of my money. And if you aren't able to pay me back, I have rights to take your property. That's usually the deal, right?
Every lender has that ability, yeah.
But that's what I mean. So if you go to a lender who's kind of shady and you sort of mess up, or the rules are so strict, or they make you jump through hoops, basically what they can do, oh no, we lost Andrea. Basically what they can do is they can take your property. Like that
Faster.
is next, they can take that property from you.
So here's the thing. And despite popular belief, for those who don't really do mortgages often, like they don't go through the mortgage process often, lenders do not want you out of your home. They just want you to pay your bill.
Yeah.
You know what I mean? Like by any means. And in a lot of cases, if you're in a position where you have to default on your mortgage, call me or call your mortgage person. You know what I mean? Because we are at least able to get in contact with the lender potentially work something out where, okay, maybe we'll put this payment at the end of the term, or, you know, like there's different things that can be done just to keep you in that house.
Yeah.
I've seen the sheriff go to somebody's house before. I'm not much of a crier, but there were tears in my eyes. You know what I mean? Because it is such a sad thing to watch.
And it takes a lot before it gets there. So you have a lot of people you can ask and help you can get before it gets there. So don't let it get.
Absolutely. So just, you know, like in a lot of cases, people tend to go into a decision paralysis to stick their head in the sand. It's the worst thing you can do because it can be fixed.
Yeah, absolutely. So Henrique, I have a last question for you.
Yeah.
I know that you're a popular guy. How would people be able to find you? Because tell us some of the ways people can find you and follow you.
So if you want all like my mortgage advice free of charge, follow me on TikTok. That is where I post absolutely all, like everything on my TikTok is mortgage related. You know, go back into some of the older stuff and you'll get a lot of the information that you're looking for. So it's my first and last name. So first enrique.levy.mortgages.
Okay.
It's also the same handle for TikTok, for Instagram rather.
Okay.
And then if you want to get in contact with me direct, Enrique Levy at dominionlendingcenters.ca is my email. Okay. You know, I get random emails all the time, so, you know, don't feel nervous. I will respond.
That's why you're up till 4 a.m.
Yeah, really.
Yeah, working, but I agree, it's a different life. So, so thank you. But what about maybe any last, you know, any last points that you want to hand off to people before we go? Because now they know how to connect with you.
I think the biggest thing that I like to encourage people is that more people are actually ready to purchase than they even realize. But because they haven't reached out to a professional,
yes,
they might get priced out of the market without even knowing it. So if you've got some savings, $20,000, $30,000, $40,000 in savings, and you've got good income coming in and solid income coming in, call a professional. Call a mortgage professional, whoever you're comfortable with, call them and at least see what can get you into the market. And then from there, you can decide what you'd like to do thereafter.
Okay.
Yeah.
Good. That's a good piece of advice. Awesome.
Yeah.
Agreed. That's an important starting point for sure. Enrique, it's always awesome to talk to you and hear what you have to say and learn your tips, because it's amazing what how you can get people moving. So thank you so much.
Thank you for having me. It was fun.
Yeah.
And sorry, Kemba, my source is not stable tonight. You guys keep cutting in and out.
Okay, well, I'll wrap us up. So thank you everyone for joining us at the Keen on You podcast. We are so happy to have had you here. You can reach out to us on all the platforms. We're on TikTok. I'm not going to say that handle, but it's Keen on You, and on Instagram, on Twitter, on YouTube, on LinkedIn. You can find us everywhere. We're the Keen Real Estate Group. You'll either find us as that or you'll find us as Keen on You. And so follow us, join us. We also have a Facebook group, which is growing fast, and we would love to have you there. Folks like Enrique and lots of knowledgeable people will share information and help you if you have a question, or just, you know, build that community that you can have a network to help you invest. So thanks again, and have yourselves a wonderful morning, noon, and night.
Yeah, thank you everyone for joining us, and always message us and ask questions. We love to answer them. And our website is www.keen, as in KEAN, group.ca.
Ciao, ciao.